This tutorial video is brought to you by Solid ECN Global Forex Broker. MACD stands for Moving Average Convergence Divergence. The indicator was developed by Mr. Gerald Oppel in 1979. Many traders worldwide are utilizing this indicator in their day-to-day trades. The main reason behind the MACD's popularity is its simplicity and flexibility. MACD is known as a versatile indicator for speculating the trend direction or measuring the market momentum. On the default setting, the indicator calculates the difference between a product's 26-day and 12-day exponential moving averages. MACD calculations are based on the closed price, regardless of the chart period. Let's jump into trading with MACD. When the MACD moving average crosses the histogram, depending on cross direction, the indicator generates buy and sell signals. MACD buy signal. When the MACD histogram is above the moving average, the market tendency is bullish. MACD sell signal. When the histogram is below the moving average, the market tendency is bearish. Let's review a few samples together. Sample 1. The red moving average is the MACD SMA. A sell signal is generated when the SMA slips below the MACD histogram. As you can see in the GBP USD 1-hour chart, the pound sterling lost value and the dollar gained 130 pips. Let's move to the second sample. This is a euro-dollar 1-hour chart. As soon as the MACD histogram goes under, the pair's uptrend movement stops, and the euro loses more than 150 pips. Let's make things more clear with another sample. In late October 2021, the MACD histogram was brutally dumped below SMA, continued with the euro-dollar slumping significantly for almost 200 pips. The MACD cross strategy fits all trading instruments in any time frame. But, not all signals have a positive outcome. Please be aware of the market risks, and do not invest more than 1% of your assets in the Forex market. Let's review a few buy signals. This is the gold chart from early May 2021. A buy signal is generated when the MACD histogram stands above the SMA for the first time. The signal has more power when the histogram turns above the midline. The gold earned 2,000 pips against the dollar in this buy signal. On this chart, the MACD and the SMA have multiple crosses. The fake crosses can be filtered by adding auxiliary indicators such as moving averages, pivot points, support, and resistance levels. Crossover is not the only signal of MACD. There is more to MACD than a simple crossover or midline flip. Please stay with us to know more about the most popular signal of the MACD indicator. If you like the video, please hit the like and the subscribe button to receive more video tutorials about Forex tools and indicators. MACD divergence. Divergence is the most popular and the most powerful trait of the MACD. Indicator divergence is when an oscillator or velocity indicator, such as the MACD indicator, doesn't demonstrate the price movement. For instance, a product price makes a new low while the MACD indicator makes a higher low. It is easier to get acquainted with the concept of divergence with a few samples. Euro-dollar daily chart. MACD made a higher low after a higher high, but the chart formed a higher high after a higher low. The pair's upward beat reversed as a result. MACD made a lower high after a lower low, but GBP USD formed a lower low after a lower high. The currency pair flipped upside as a result. The chart made a lower low after a lower high, but the MACD signals a higher high than a higher low. Pound sterling momentum reversed and gained a significant value as a result. I hope this tutorial helps you with your trades and increases your profitability. If you like the content, please like the video and hit the subscribe button. Please note that foreign exchange and other leverage trading involve a significant risk of loss. It is not fit for all investors and you should make sure you realize the risks involved, seeking independent advice if necessary.